they're sitting back and they're trying to figure out what to do, how to respond to to not. It's not so much that they're responding to the tariffs. They're responding to the uncertainty. They don't know. They're like, okay, do we increase interest rates, to deal with inflation, or do we reduce interest rates to deal with the downturn? But reducing interest rates can be inflationary, so that's an issue. So one of the things I mentioned to you all before is I'm gonna start buying some bond funds and diversify out a little bit into that space. I'll probably do that maybe today or tomorrow. I'm not sure. And what I'm gonna do is I'm gonna text out a list of different bond funds that I like. So make sure you get on the text list, and I'll send that to you today. Just text the word morning to the number 87948. It's right there on the screen, and you can also join our morning class. Also, those who are in the morning class, you get an exclusive invitation to our Economic Elevation Summit in Miami, which is May 9th and 10th. And that's where wealth builders get together to plan the future. That's where we plan the future of our community and of our families. And also, we just break down the most direct ways to build wealth. So get on the text list. I'll send that link out to you guys for the Economic Elevation Summit, which is going to be May 9th and 10th. What else is happening? Hit the thumbs up button, by the way. Please hit the thumbs up button. Thumbs up, share, subscribe. And I hope you'll subscribe to the podcast on Spotify too. It's good. I think you're going to like it. All right. So here, right now, one of the stat, I didn't know this, is that global markets have actually had the worst month since the COVID recovery. That's a big deal. So it says here, stock indices worldwide have gone down. So global stock markets all around the planet have actually dropped, and that's a problem. And this is most of it's due to fears of a global trade war. Usually, when you declare war on somebody, they declare war on you. You punch them, they're going to punch back. So even though Europe can't really punch back at the United States as hard as we can punch them, they're going to punch. They're not punks. Canada's really fighting. Mexico's trying to negotiate. And it's really a tough situation because America's the boss. As much as some people don't want to accept that, America has really been very economically beneficial as a trading partner for a lot of these countries. And a lot of this, I think, really goes back to World War II, where we just kind of are like, look, just let us make money in your country, and we'll give you defense, and we'll give you all these other things. But I still think overall, though, that this trade war is probably the greatest threat to economic stability that we've seen in a while. The bond market is already starting to react. Treasury yields have jumped to a multi-month high. It basically, as traders are pricing in the higher inflation that's going to be caused by the tariffs. But it's interesting because sometimes the yields go down because the bond prices go up because everybody wants to buy bonds. So it's kind of an awkward sort of relationship there. And a lot of companies, Walmart, Home Depot, and Ford, have issued public statements and adjusted their forecast. They're warning their investors that they're going to have challenges with the supply chain because of these tariffs and things like that. They won't mention President Trump directly, but they're all thinking the same thing. They just right now we kind of have this this sort of gangster president that that people don't want to piss off, and so I believe that what they're doing is they're all trying to play nice with Trump, but they're sitting back and trying to politely say to him, like, look, bro, stop it. Please stop trying to please stop telling, please stop doing these things that are going to slow down the economy. And I want to show you all right now, Dow futures, which is an indicator of what the stock market is going to do today. Dow futures are negative right now. It is 300 points down, and ultimately today, so far in the morning, is not going to be a good morning in terms of stocks. And like you read here on CNBC, it says U.S. stock futures fell Monday as traders look ahead to Liberation Day for clarity on President Trump's tariff plans. Futures tied to the Dow dropped 326 points. A slew of tariffs previously announced by the Trump administration will go into effect on Wednesday, what Trump has called Liberation Day, including a 25% levy on, quote, all cars that are not made in the United States, end quote. The president's also expected to announce his plan for reciprocal duties aimed at countries that impose tariffs on U.S. imports. Uncertainty surrounding tariffs has weighed on equities, dragging stocks lower on Friday to end the last full trading week of March. Trump did little to assuage fears over the weekend, with the Wall Street Journal reporting Sunday that the president had in recent days pushed his advisors to get more aggressive when it comes to tariffs. In a Saturday interview with NBC News, Trump said that he could care less if foreign automakers raise their prices due to these new tariffs. Auto stocks were lower on Monday. Ford and GM were down around 1%. What's really interesting, and this is something that's important to point out about tariffs, is that if it's a matter of of Trump protecting U.S. industries by putting these tariffs on other countries, then you would expect that American automakers would see an increase in their stock price, right? You would expect Ford to benefit from protecting the economy from foreign cars.